is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better.
Hello and welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me is Cheryl D'Souza. And it's a Christmassy week, and Cheryl, we both are in the Christmas colors. For now, the markets are matching the color with me.
I was actually
just
going to
hope
say
that they go with you going ahead.
I was actually going to tell you, more than Christmassy, we are in sync with what the markets are like. You know, volatility, name it, up and down, both of us are here. But yes, hoping that through the end of the day at 3:30, I stand victorious, given the fact that I'm wearing the color green. But for now, like Shrishti said, the markets are siding her. We are seeing red on the screen, and it's a weekday coming in for the benchmark indices, and global cues, I believe we can blame them this time around. No doubt you saw that weak handover coming in from the US markets as well. No doubt US markets also recovered most part of their...
And with each passing day, this market is only telling you...
It was something to worry about. If you look at the way how the markets are panning out right now, 1% downtick coming in for the benchmark indices as we speak. I believe that is the lowest point of the day for the benchmarks. You have Nifty Bank also that's trading with cuts of about 1% as we speak. Talking about the list of losers, no point in guessing the fact that out of 50 Nifty stocks right now, you have at least 44 that are in the negative territory. Out of the gainers, it's the pharma names like Divi's Laboratories, Cipla and Sun Pharma that are holding the fort as of now. Along with that, you also have Nestle that is seeing green on the screen. But on the negative side, Hindalco, Adani Ports, Tata Steel, Tata Motors, Hero MotoCorp, and the list can keep going on, and all of them are seeing really sharp cuts as we speak. Talking about sectoral indices, except pharma, nothing else is in the positive territory. PSU Bank Index for almost over 3.5% downtick coming in for the PSU Bank Index. This has been the winner for the last 1 to 2 months, but right now, as you can see on your screen, it is deeply in the negative territory. 4% for the PSU Bank Index. Broader markets as well underperforming the benchmark indices. Metal down about 2.5% as well, and power index is also under immense pressure. But no doubt, it's red on the screen for the markets. But one respite that we can have, yes, we are inching towards the Christmas, as well as it's Friday, so which means we have BNS and Pathshala today, Shrishti.
Well, yes, absolutely. It has to be a learning day for all our viewers. And today as well, we are being joined by Kunal Bothra into the studios, and we're going to be learning about how to spot a turnaround. And before we get to that, let me tell you that Kunal Bothra, I feel, has the expertise, because a recent turnaround that he spotted was Divi's Laboratories, and he's going to be telling you how to spot a turnaround in some of those underperforming stocks. So let's get across to him. Kunal, over to you.
Thank you so much. It's so cheerful to see both of you guys in the best of the colors of Christmas. Let's hope that the markets turn out to be a bit better than what they have started off in the morning. Now, the session today, which I'm discussing, is spotting a turnaround. Now, this is a very important and a very critical kind of a chart or an indication of a thesis over here, because this tells you this is completely different than what is actually available in most of the technical analysis textbooks. But then this is something which is more practical in nature. Now, what happens when the stock is getting into an underperformance zone? There are two important things which tends to happen. The news is extremely negative for the stock, and the stock is going into a major kind of a correction, which means the stock becomes a huge underperformer with respect to most of the peers. Now, the two examples which I've spotted up, and the ones which are very, very recent enough, and there has been a major turnaround. So the first charts we'll look at is Lupin. Now, as you can see on the charts, and I'm mapping up one very important data point over here. So Lupin had been a huge underperformer right from the 2020 lows, even from the 2021 highs. This was a phase where Lupin went into a correction. And in this phase, most of the pharma stocks like Sun Pharma, Cipla, etc., the other larger cap names, more prominent stocks, they were outperforming the pharma sector. Now, this was the point where we call it as a turnaround. Why do we call this as a turnaround point? Because this is the zone where the news flow, which becomes extremely negative, the stock opens with a gap down, closes with a significant gap up, makes into a multi-week, multi-day breakout mode, and the volumes come out to be a huge volumes the stock has seen over the past many months. So as you can see, the volume tick over here was one of the best volumes the stock had seen, and cumulative to that, the price action was extremely bullish. We call this in technical terms as a selling climax, when the selling gets over and the news flow, which has been extremely negative prior to that, also manages to go into a turnaround mode. The second chart was also a very recent chart, and it's from the tire stocks, one of the stocks which I've been bullish upon, and something which I managed to catch on right from the fag end of the correction for the stock, and that's Balkrishna Industries. Now, this was a huge underperformer stock compared to the likes of Apollo Tyres, CEAT, JK Tyres. And you look at the charts over here, very, very similar kind of a chart. The stock comes out with a negative news flow over here, opens with a major gap down, recovers the entire loss, and then manages to close at the high point of the day. This closing is almost at a multi-week, multi-month high for Balkrishna Industries. Again, look at the volumes over here. A majority of a massive volume surge over here, which indicates that the stock is getting into a turnaround mode. And look at the stock from here. Slowly and gradually, the stock started to go into an upward trend, and we've seen a recovery from 1800 levels to almost 2150, where the stock is trading right now. So this is how we classically spot a turnaround, or what in technical terms we call it as a selling climax.
All right, so that's something new that all of us have learned today, how to spot a turnaround or a selling climax is how what is known in the technical terms. But let's shift focus then on to the markets, and today we did not have one but two new listings and one in the SME market as well. So you had two subdued listings coming in today, Abans Holding as well as Landmark Cars, both of them actually listed on the bourses with cuts. You also had an SME listing, that is it's a drone company. So you had that one also list with but on the positive side. But we have another one that is looking to list on the bourses and has launched an IPO, and that is Radiant Cash Management. Right now we are joined by Colonel David, who is the Chairman and Managing Director at Radiant Cash Management on the show. A very good morning to you, sir. Thank you so much for joining us on ET Now. And firstly, let me talk about the IPO and how do you plan to use the proceeds from the fresh issue? And it's also, if you could tell us, what will be your expansion plans?
The fresh issue is, for 60 crores, which is coming into the fund. And it is divided into three parts. Now, you know that on a daily run rate, we are handling between 400 to 500 crores a day. And we're also deeply into network cash management. So there is a need of a small amount of buffer funds available with us when you're handling this volume of money. So the first 20 crores, or 1/3 of this amount, is going to be kept as part of our working capital needs to meet any kind of buffer requirements for funding this money out of the network cash management.
Hi, very good morning, Colonel David. This is Shrishti joining in. You are the leader in the retail cash management for the banks and financial institutions, but it is an ever-evolving space that you're working with. What is your USP versus the other providers, and how does the use of the tech given by you have an edge over the other players?
That's a good question. I was in the armed forces for 25 years. I came out as a colonel. I commanded 2 battalions and a training center. And here, this was a business, retail cash management, which I focused on for the last 17.5 years. And it is a zero-error business, and we are handling public money. So I felt it was the best that I should bring in my own ex-service colleagues who have their own DNA and they have their own culture, the DNA of integrity, hard work, discipline, dedication. So with this, we carry out our services with a lot of pride, with a lot of elan, and that's the DNA of our organization. That's something that we can't capture in any DRHP or RHP, but that is the USP.
All right, Colonel David, we leave it there, and all the best for the IPO and also thereafter for the actual listing of the company. And that was the management of Radiant Cash Management joining us on the show. But on that note, we will take a break on this edition of Buy Now Sell Now. But when we come back, we will be back with your queries, so don't go anywhere.
Powered by ArcelorMittal.
That if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees.
Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees.
Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and we have our experts today, Kunal Bothra as well as Avinash Gorakhshakar, joining us on the show. Very good morning once again, Kunal, to you, and good morning to you as well, Avinash. Thank you so much for joining us on ET Now. And yes, it's definitely festivities all across ET Now newsroom, but that's not the way how it's reflecting on the screen, Avinash. Given the fact that the markets are seeing immense pressure owing to what is happening globally. But in such a market scenario, how should retail investors make sure that they continue to protect their wealth? Because volatility is kind of a spoil sport.
Yeah, I think markets have definitely been very volatile for the last few days. I think largely because of the COVID fear. Cheryl, my advice is that stick to quality and be a long-term investor, because in the very near term stock prices have corrected very sharply. So that has created a lot of panic within retail investors. But I think if the company's balance sheet, financials is pretty strong, and I think the tailwinds in the sector is also pretty positive, then I think one should need to hold on and I think look at the companies from a long-term perspective. I would believe that once the COVID scare goes away and hopefully some more clarifications come in, the market would bounce back also equally sharply. I think the Indian economy is in the best of health. We have got a large kind of corporate capex done by a lot of companies. Quarterly numbers for Q3 are also expected to be pretty decent. So I think this is a time where you've got to be selective and you've got to have a lot of conviction and patience on the stocks which you own. So I think long term and don't think short term. And I think this pain will soon go away. Markets will definitely recover, but I think it needs a lot of temperament and patience, to face these volatile markets.
So hopefully this pain will soon go away, but India's growth story is yet to pan out. So for the long-term investors, it's going to be a good time ahead. Let's hope for that. But with this, let's kickstart our queries section. And taking up the first query, Kunal, this one's for you. Vinay is asking your take on CG Power and Solution. He bought it sometime back, 1,000 shares at a price of 200. Now sitting at almost 50 rupees profit per share. What will be the strategy in this particular counter? Should he book profits or hold on?
So I would suggest to hold on as of now, because the stock has not entered into an oversold territory, and when it does, I would expect a strong bounce also to come by into the stock. But then the recent sell-off could probably indicate that maybe the stock price trends have reversed from a medium-term play, but the price may not be the best price we're looking to exit, because it may be more of a panic low which the stock would have hit today. So I would suggest that you wait out for a mild bounce, maybe if closer to the 270, 275 odd levels, or at max 280 mark. That could be a better point where you can look to book out profits. And then if you're looking to buy back again, then wait out for a further period of correction of more than 10% from your exit price.
All right, let me take this first query coming in from Humaira Sheikh then, and this one's for you, Avinash. Wants to know whether it's the right time to invest in RVNL, that's Rail Vikas Nigam Limited. Wants to know for a short term or the long term, but I'll take your view for the longer term. And also along with that, if you could touch upon the railway counters as well, do you think that they are an attractive bet for the long term, including RVNL?
Cheryl, I think RVNL as well as other rail infra stocks are likely to do definitely well over the longer term, considering the fact that the railway budget is going to be presented with the normal budget, and this time there are indications that the corporate capex which is going to be done by railways is going to be at a record high. My sense is that focus on companies which are into specialty or which are into niche business areas like wagons, or typically electrification systems, or even train collision systems. So I think in this respect, you could look at RVNL from a longer term perspective. But I think there are many good companies like Titagar Wagons, HBL Power Systems, and I think the market is offering investors a good opportunity to buy these good quality stocks at lower levels. So I think if you have a time horizon of say 12 to 15 months, you could definitely think of accumulating these stocks, because the earnings quality and the earnings push is going to be quite significant over the next say couple of years.
Okay, so that's the take coming in on the railway counters. But moving on to the next query, Kunal, Swastik is looking to enter into some of the large cap names like HDFC, Bajaj Finance or Asian Paints. But he wants to know, is this a correct time? Because recently large caps have been showing some resilience. But should he wait for some more time to enter, or current market price are lucrative enough?
So it depends first on your time frame. If you're looking at it as a longer term play, then yes, I think these are good times so you can start nibbling in. But always remember this way, that it makes sense to look out for trends sustaining for these kind of stocks. Now, for example, Bajaj Finance, the stock has been making a pattern of lower highs and lower lows, I think since the September end highs. If I'm not wrong, 22nd or 23rd of September is where the stock had made a major high for itself, just around the 7,700 odd mark, and from there the stock has corrected more than 1,500 to 1,600 points as of now, and that's the point over here, because this correction, this trend may continue for some more time for these names. So ideally a better time to try and buy these stocks is let the stock give you a confirmation of a turnaround, and that's the time when you buy the stock. That could be maybe another 100 points premium from current levels, but then when you're trying to look at it from long term play, 100 points, 200 points, they generally don't matter too much in the longer term in the scheme of things. So I would suggest that you should look to buy these kind of stocks, but then wait out for a point of turnaround rather than nibbling at current levels.
All right, the next one is coming in from Manish, and Manish wants a level to start investing, or rather start accumulating defense counters, Kunal. He's named a couple of them, that is Mazagon Dock, Garden Reach, BEL, HAL, and his time horizon is 6 to 9 months. Do you think you can accumulate these defense counters right now, or some more correction is warranted? So
from a 6 to 9 month perspective, I don't see any major reason why you should be accumulating the stock. This is the tendency. What happens is most of the times that when a stock gets into a big turnaround mode, for example, stock like Mazagon Dock, which was almost at 240, 250 6 months back, stock jumped up to almost 900 plus levels, and now with a correction of just about 150 odd points, there's always a tendency that stocks would replicate a very similar kind of a 2x, 3x kind of a multiple in terms of returns, but that generally doesn't happen. These kind of stocks, they go into a multi-month correction as well as consolidation. So your time frame has to be extended. That's the only point which I would say over here. And then buying the stock at a retracement of 200-day moving average would actually turn out to be a better play. For example, BEL, the stock is, I think, 7% or 8% away from its 200-day moving average. Let it come back closer to 90, 92 levels. That's the point where you can look to average, and a very similar kind of a price zone for the other names which you mentioned.
Okay, moving on to the question Guru is asking in Avinash, this question is for you. Guru wants to enter into KPR Mill as well as Century Textiles. Is this a good time to enter in both of these counters?
Shrishti, I think as far as the textile space is concerned, I would believe that it is better to wait for the December quarter, because textile sector is going through a small crisis. In fact, the export market has been a little rough considering the turmoil in the US and the European markets. So I would believe that you could probably get a better entry in both these companies if you were to look at the Q3 number, which is scheduled to be out by mid-January. Overall, the industry has been going through a lot of rough kind of time, and I think margin pressure has been evident since the second quarter. So I think if you want to buy it, there could be lower levels which possibly you could accumulate after the third quarter, and obviously listening to the management commentary. As of now, if you have the stock, you can hold on, but fresh buying is not advised.
From Santi, and this one is for you, Kunal, and he has Clean Sciences, 32 shares at a price of around 1,562 rupees per share. He's saying the stock has hit new lows post its IPO listing, and the stock RSI is below 30 is what he's noted. He's saying in such falling stocks, how to find bottom as per the technical study. Also, he believes that the China issue impacts the supply destruction on the specialized chemical company stocks, but the fundamental he believes are intact of Clean Sciences. So primarily on technical side, he wants to know what's the support and the best levels to accumulate, and also till what price.
See, it's an interesting question, but the answer is very simple as well for these kind of stocks. Is you have to wait out for a point where the supply or the demand rather overseeds the supply for the stock price, and that could be clearly figured out by two important data points. One is the volume shooting up significantly higher, which means that the average volumes have to start being much higher than the average volumes over the last maybe few trading sessions or few weeks, depending on the kind of reversal you are looking at. And then the prices have to start or rather stop falling and start to get into a reversal or a upward trending mode. We are still not seeing those signs emerging for Clean Life as of now. The stock is still into a free fall as such, if I can use that word. The volumes are still a bit low, not anywhere closer to a turnaround, and even the indicators are not entering into an oversold territory, at least as of now, which means that there could be more scope of correction over the near term. I would suggest that just a wait and watch as of now rather than nibbling into the stock.
Okay, moving on to the next query, Ranganath Rao. Avinash, this question is for you. He has invested in two counters, that is, one is SPIC at a price of 73, that is Southern Petrochemicals, and the other one he has is National Fertilizers. He accumulated this counter at a price of 80 rupees per share. What will be your advice, because he's sitting at a mild loss in both of these counters? Going ahead, any hopes on recovery, and especially for National Fertilizers, what's your stake? Because it's just a couple of months away from the budget.
I think you should hold on to both these companies, considering the fact that fertilizer is going to be a big focus area for the government. My sense is that we could see a significant increase in the agriculture outlay and a lot of fiscal benefits given out to fertilizer companies. And most importantly, National Fertilizers has been now making decent operating margins. They have started turning around, and I think obviously in the urea pack it has a large capacity, a good pan-India presence. So I would believe that if the investor has a time horizon of at least say 12 to 15 odd months, he should hold on. I think he should not panic. The markets have also been pretty volatile, so both these counters have been beaten down. But I think if one were to look at the next 12 to 15 months, I think a decent risk reward could come.
All right, the next query that I have is coming in from this one is coming from Arvind. SBI Cards, he's bought in the IPO at a price of around 775 rupees per share. Kunal, he wants to know whether he should average it now, and also does it make sense to hold on to SBI Cards for the short to long term horizon?
Well, I would suggest to try and exit the stock maybe at a minor bounce. I think 800 and 825 seems to be a zone where the stock keeps on tapping on a regular basis. So if you're looking at an exit point, I would suggest that that's a good zone to exit the stock. The volumes, the price patterns are still not indicative of a major bottom over here for SBI Cards, and the stock has been trending down since quite some time. So I would suggest an exit, but maybe on minor rallies.
Okay, but with this, it's time to slip into a short break, but don't go anywhere. We'll be right back and taking up more of your stock queries.
I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
Welcome back to Buy Now, Sell Now, and let's keep it going. We're taking you all your stock queries. And Kunal, coming to you, the next question is from Ashok B, and he has entered into 3 counters, all in the futures side. Firstly, he's trading Tata Motors December futures. He bought this at a price of 436, a loss of almost over 30 points in this particular counter. For January, he has bought Indian Hotels at a price of 320 and IDFC First Bank February futures at a price of 60. All of these 3 counters showing deep cuts in today's trading session. What will be your advice? Continue to hold on. Any hopes on recovery?
See, first things first, that there had to be a price-based or a percentage-based stop loss. That's how you trade. So whether it's a monetary-wise stop loss which you generally keep, whether you are okay with losing certain sort of an amount, or it's in terms of percentage loss. So the thesis at which you've taken the longs, if those thesis reverses or the rationale reverses, then it's it's much better that you take your stop losses. Any which ways, now at current levels, I think the first things which you can do right now is to plug your losses. You can do it by either buying an immediate at the money put option for these strikes or these calls or these stocks which you've taken and wait out for a period of bounce. So you may lose out marginally in terms of the put options, but then if the stock bounces back ferociously, then you may get a better exit point. To try and compensate this, you may probably tweak with selling of some call options at a higher strike at your cost price, for example 430 for example for Tata Motors and such kind of a levels for your other stocks. So I think that's a better repair strategy which you can do as of now, but then I think wait out for a period of a mild bounce, but then exit the stocks whenever the bounce actually shapes up.
All right, the next one is coming in from Madhuri, and she wants a long-term view, that's 2-year plus horizon view. Avinash she wants to know, do you recommend buying Power Grid and Power Finance Corporation or any other PSU with good returns apart from PSBs?
I think PSU companies definitely look interesting, and I think my sense is from the logistics space, Container Corporation of India looks pretty solid. I think it's a play on the railway infra theme, and I think hopefully once the strategic divestment is over, you could see a very significant amount of re-rating here. As far as Power Grid is also concerned, this is a very solid kind of power distribution entity with a regulated return, but I think it has been doing a commendable job. So I think if one were to take the next 12 to 18 months, Power Grid and Container Corporation would be very strong bets from the PSU pack. So one can use the dip to accumulate these stocks.
Okay, moving on to the next query. Avinash, Satya Veni has a question for you. He wants to know, is this a good time to enter into GMM Pfaudler? Because after the promoter offloading some stake, the counter is continuously under pressure. No stopping there, but a right time to enter.
Yeah, I think we ignore the corporate governance issue. The basic fundamentals of the company remain very solid. GMM Pfaudler is a very solid kind of company operating into glass liners, boilers which are supplied to the pharmaceutical sector. And I think they have a very large order book, a very good earnings kind of stream going forward. So my sense is that if the investor has a 12 to 18 month time frame, then one can use the current weakness to buy into the stock. But please remember that in the very near term, the stock will remain volatile. And I think the market should obviously take a look at the earnings quality and the growth in the next couple of quarters. So definitely worthwhile looking at it, but take a long-term view and ignore the short-term volatility.
Right. This one is from Samir, and he's writing to us from West Bengal. He wants to know, in the current juncture, are the bank stocks worth accumulating, Kunal? And which is that one banking counter that looks good in the entire space?
So I would still believe that maybe some time away from now, the banking stocks could look a bit more better. And I would probably believe that maybe the likes of IndusInd Bank could be one of the top names which you can consider. Axis Bank also is something which you can look to consider at maybe slightly lower levels, maybe 900 or slightly below the 900 mark for Axis Bank. These are two names which I would probably tend to prefer at current zone because of the way these stocks have outperformed the other peers from the banking pack. I would also believe that if the PSU banking stocks go into maybe another 5%, 7% correction, they could actually turn out to be good buying zones for the PSU banking stocks. So you have to try and more segregate. You can't be fixated toward just one stock from the entire plethora of private sector and PSU banking names. You have to spread it out evenly in terms of the market cap as well as the spade of stocks from the private as well as the PSU names.
Okay, moving on to the next question, Kunal. Tina wants to know from you, is this a good time to enter into Titan, Reliance, ICICI Bank, Bata, Airtel, all of these large caps names? She says that she has a couple of lakhs to spare and she wants to know your top picks, but going ahead in the next week, we'll be taking all the top picks by our experts and Kunal as well. But for now, in this market fall, if we can suggest her, is this a good time to enter in these large caps?
Well, it is a good time to start nibbling in, and I would probably look at it this way, that if you are looking at allocating say 100 points, then I think at this point of time you should look to allocate maybe 33-35% of your expected quantity or value which you are looking to deploy. So these are large cap names. We don't know how much the markets can correct going forward, whether this is a major global correction or whether it's just a minor correction in play. So you can start nibbling at current levels, wait out for maybe another 3, 4, 5 days. If the selling doesn't stop for the indices, then you can look to accumulate these stocks like Titan, Reliance, etc. Maybe another 4 to 5% lower. So keep a 4%, 5% kind of a benchmark from current levels. Whichever way the stocks correct from current zone, I think that's a zone where you should look to add on further and accumulate.
Okay, this one is coming in from Girish. I'm unsure if you track the stock, Kunal. Ishan Dyes Chemical. Do you track this one by any chance?
No, not really.
Okay, then let me move on to the next query then. And Satya wants to know if it's the right time to, or what's the right price to enter Patanjali and Zomato, either one of them?
So I would believe Patanjali not at current levels, but maybe around this 1,000 or slightly below the 1,000 mark. I think 1,050 was a major support last time around for Patanjali. From there, the stock moved up to 1,400 plus. So in a mean reversion, the stock not just retests the previous lows, previous swing lows, but even it goes slightly below the previous swing low. So it's always better that you're prepared for maybe another 4%, 5% correction further from the previous 1,050 mark for Patanjali. So I would suggest that if you're looking to buy, 1,000-ish could be a zone where you can look to start accumulating.
Okay, taking the next question from Yogesh and Avinash. He entered into CMS Info Systems at a price of 216, 200 quantities, and he's sitting at a gains in this particular counter. But in the past 1 month, the stock has already fallen around 16-17%. What will be your advice? Book profit at these levels or continue to hold on?
Shrishti, I think you should hold on because in the cash management market, I think CMS is the #1 market leader, and I think they have positioned their business very well. In fact, the management has clearly said that over the next 2 years, they're looking at, looking at a top line of 2,500 crores from the current level of 1,500 crores. And profitability has also been very solid. It's a debt-free business with a very high ROC, ROE kind of, margin structure. And most importantly, looking at the kind of geography of operations they cater to, I would not be surprised that, if one were to look at the next 12, 18 months, this business is definitely going to flourish quite well. In fact, my sense is that despite more competition coming in the market, via Radiant, cash management system, which is where the public issue opens today, I would not be surprised that margin structure would continue to be positive. They operate at almost 25% EBITDA margins. So continue to hold on if you're not in a hurry. Another 15, 20 or 20, 25% upside looks possible, but you need to give some more time.
All right, the next one that is coming in is from... This one, actually, I have a lot of queries pending. Okay, this one is from Shal, and he wants to know what's the best price to enter Asian Paints, Pidilite, Bajaj Finance for the next 5 years. I also have Ayush Bharadwaj, who's asked whether it's good time to kind of enter Bajaj Finance. Let me club both of them, Kunal, to you. One, for sure, give me an answer for Bajaj Finance, and the other one between Asian Paints and Pidilite.
So Bajaj Finance, I would believe that maybe 5,700 could be a zone where you can look to start entering. That could be another 5%, 6% lower from current levels approximately. For Asian Paints, I would be a bit intrigued because, the recent... So Asian Paints, we all know that has a high correlation with respect to fall in crude oil prices. But in fact, in the last 2-3 months, when the crude oil prices have fallen very sharply, Asian Paints have also corrected from 3,400 levels to now almost 3,000 or on the verge of breaking below the 3,000 mark. So which means that the correlation seems to have broken, and that may not be a good sign which bodes well for the stock price. So you have to wait out for the point where the stock gets into a zone of a rally from here on. So maybe buying at a higher point could be a better or a beneficial trade for Asian Paints rather than nibbling at current levels.
Okay, so that's the view coming in on Asian Paints. But with this, it's time to slip into a short break. But as we go, markets drifting lower. We did break 17,900 on the Nifty and 41,900 on Bank Nifty. We're trying to defend those levels. So let's see whether we get successful there or not. But we're going into the break. But don't you go anywhere, because coming right back, we'll be taking up your stock queries.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees.
Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees.
Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now,
Welcome back to Buy Now, Sell Now, and let's move on to the next query that we have. And Kunal, let me take it from you. Mahalakshmi has been holding Bharat Forge from a price of 517. Recently, we did see this counter hitting an all-time high levels for itself, but she's in this counter since a long time now. Advisable to book profits or continue to ride this winner?
I think advisable to book profits over here. It makes sense to exit the stock at current levels. Maybe revisit the stock when it actually gets into a bounce process or the market stabilizes. These are best times to try and be a bit more lighter in terms of your portfolio, reduce the risk, reduce the beta from your portfolio. So I think if you're sitting in profits into these kind of names, it always makes a lot of sense to book out profits.
Okay, this one is coming in from Sagar and he wants a fundamental view on Nykaa. Avinash, I believe you tracked this counter. So he wants to know what sort of target should he look at. I'm unsure if the target that you all have placed is around 200 or 300 rupees per share on Nykaa. So he wants to know what's the rationale behind the target. Also the fact that does Nykaa look attractive for a long-term bet if someone is already invested in this counter?
I think, Cheryl, this stock has disappointed a lot of investors, and I think after the company announced a very massive bonus of 5 shares for 1 shares held, I think now it would be little difficult for the company to actually get back on the earnings growth stream in the very near term. The post-bonus equity would be about 147 crores from 47 crores earlier. So my sense is that investors need to take at least a 2 to 3 year view. The business definitely is very strong, has promising prospects, but I think in the absence of any earnings growth, at least in the near term, I don't think you're going to see a very strong re-rating in the very near term. So unless you've got a 2 to 3 year kind of time frame, in the near term, I don't expect any major triggers here.
Query, Avinash, is from LRG Reddy and he's holding Mirza International 5,000 shares from a price of 275. Sitting at losses in this particular counter, after a stellar move on a YTD basis, the stock is actually down 40% from its highs. Going forward, any hopes on recovery?
I think Mirza International did a good, kind of demerger of their red tape division, and I think that benefited the shareholders significantly. So my sense is that if the investor has a long-term kind of time frame, then only he should hold on. The footwear market is definitely quite promising, and I think branded players like Mirza, Bata, or for that reason Metro have been doing pretty well. There was a hiccup in the second quarter numbers, but if you look at the long-term business model of all these companies, there's a lot of potential and a lot of headroom to grow. So I would believe that even despite the fact that the stock is down by 40% for him, if he has a 12 to 18 month time frame, I think he should hold on. Rather than booking a loss, he could give some more time here, and probably after that he could get a decent risk.
All right. This one's coming from Geeta, and Geeta is writing to us from Dubai, Kunal, and she wants a stock in the IT space for the long term at current levels.
So I would still go with larger cap names. I think it makes sense to maybe look at Infosys or HCL Tech at current levels. I understand that these stocks have also corrected, somewhere around 10% to 12% in the last 3-4 weeks. But then when you're looking at buying something from the sector, and when you're looking at a longer term play, it always makes sense to go with formidable large cap names. And the best part about the IT stocks, at least so far in the last 3-4 months, is that the beta for the stocks is significantly lower than what the beta has been when these stocks were going into a correction mode, which means that even if these stocks correct, the correction could be a bit more less as compared to the overall market. So that could also be a tad bit of an outperformance for your portfolio. I would recommend sticking to large cap names. Infosys and HCL Tech would be the preferred names.
Okay, moving on to the next query. Kunal, this one is for you. Karan wants to know your take on Lemon Tree as well as IDFC First Bank. He has bought Lemon Tree at a price of 81 and IDFC First Bank at a price of 55. For the 3 to 5 years perspective, what will be your advice?
So IDFC First Bank looks attractive. Since you bought at 55, I think the stock is near about to those 54, 55 levels. So you can possibly continue to hold on to the stock at least as of now, but then keep a price trigger kind of a stop loss, which could be comfortable to you. For Lemon Tree, on the other hand, I would suggest to wait out for a minor bounce over here. Let the stock come back to your cost price of 80, 82 approximately. That's a zone where you should look to exit the stock.
All right, and with that, let's kick start with the rapid fire then. And first one is coming your way only, Kunal. Venkatesh is asking, is it good time to accumulate Voltas at current levels?
Well, yeah, I think at current levels of 780 approximately, it's a good time to start accumulating and then add on every 5% to 7% dip.
Okay, Avinash Manjunath is holding HCL Technologies and PNB, sitting at a 10% loss in both of these counters. Continue to hold or sell?
Yeah, I think we should continue to hold. Definitely over the next 12 weeks.
All right, this one is coming from Kaustubh, and this one also is for you, Avinash. Fundamental view on CG Consumer.
I think we should hold on. I think definitely in the near term there could be challenge. for the longer term, I think could value.
Okay, Kunal, Shankar is holding 70 shares of Somani Ceramics from a price of 615. What to do in this counter, sitting at a loss?
I think you should look to exit.
Okay, Chetan wants to know about Deepak Nitrite. Can he look to buy, Kunal?
Well, yeah, I think it's been one of the stocks which has done reasonably well, at least over the last few weeks, relatively. So I would suggest a buy.
Okay, Avinash Karthik wants to know your take on Marksans Pharma. He entered this counter at a price of 63 for the 3 to 5 years. What will be your advice?
I think we should exit the stock. There have been a lot of issues as far as the operational of the very high working capital to exit.
Alright, Prema has Coromandel 900 rupees per share is the price. Hold or average? What's your take on this one, Kunal?
Well, I would suggest an exit on Coromandel.
Okay, Avinash Shankar is holding Themis Medicare at a price of 919. What will be your advice?
Here also I would suggest we should look at exiting because the stock valuations are pretty expensive. I think in the near term the stock there's a upside.
Alright, this one is from Indumati. Mid-cap stocks are a value buy at this in this correction. Industrial and machinery stocks, is it, Kunal? And also, which one would you pick in that basket?
Well, I would suggest a wait, maybe another 5% to 10% down for most of these mid-cap industrial stocks is where you should look to accumulate.
Alright, and with that we come to the end of the rapid fire as well as the query segment. Thank you so much, Kunal, for that BNSN Pathshala. Thank you so much, Avinash, for joining us on the show. And with that, season's greetings to all of our viewers from team Buy Now, Sell Now. That is from Shrishti, myself, our producers Abhishek, as well as Shawnee, and our directors Ravindra as well as Santosh. From the entire team of Buy Now, Sell Now, season's greeting to all of our viewers, and we will definitely see you next week.
After 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees,